Some stocks have exploded with 500% to over 3,000% gains in 2026 alone. Is this a historic wealth creation moment, or are we at a major inflection point? And is this the beginning of something significant or the beginning of a dangerous bubble? In this episode, we'll analyze stocks printing over 500% to 3,000% returns across both the Nigeria and the US market. We'll also discuss about Femi Otedola's massive 43 billion naira bet into First Bank. Also, we'll analyze the new upward target price for Access Bank, despite its many challenges with both year not paying dividend, but there's a new upward pricing for Access Bank. We'll talk about the next bond auction that is taking place, and we'll dive deep into where you should be placing your money or how you should be hedging your bets right now, making sure that you also stay aware of the risk available or inherent in these times. So stick with us. Wherever you're joining us from, whether you're joining from Lagos, Nigeria, you're watching from London, New York, or anywhere across the globe, you are welcome to The Edge. And I'm delighted to be joined today by Dipo Ajayi. Dipo Ajayi is Head Fixed Income and Vice President at Chapel Hill Durham. Dipo, how are you today?
Yeah, good day, Dr. Carver. Thank you once again for having me today.
It's my pleasure. Always a pleasure having to chat around Nigeria's financial market, global financial market, helping our followers, listeners to make sense of what's happening out there. So please, if you are joining us for the first time, please like this video, subscribe to the channel, and hit the notification bell. We're here every weekend analyzing the global financial market, analyzing Nigeria's market, helping you make sense of investable opportunities in the global market. All right, so Dipo, let's discuss what's everyone I've been watching. Nigeria's financial market is leading significantly based on the year-to-date return. It's currently over 62% year-to-date return. And that's despite some intra-week volatility that we saw and some modest pullback in the index. But the index still closed above 250,000 points. So was this a classic case of healthy consolidation, some profit taken after such massive rally, or does it signal that the market is, or the market might be losing some momentum?
Well, this question sounds deja vu to me because I think I had same question sometimes in 2024. Towards the end of the year, when the market has actually printed about over 40% return. I was asked the same question there. Do you think that what we are seeing is a bubble? Do you think that we will see market correction? But between that 2024 and now, the market has done another 100%. So the question must come again today that are we thinking that we are in any bubble? I don't think we are in bubble. I think market is actually repricing. And I think over a long time, Nigerian market has heavily been underpriced. We understand what happened during between 2015 to around 2023. We had a lot of prices from the drop in oil prices around 2015 to the capital control process where foreign investors were actually shut out of our Nigerian markets. And over that period of time, the market was heavily underpriced. And I can remember we keep drumming it regularly that Nigerian market is heavily underpriced and the current market will be re-rated. And when the new administration came in, what they did was one of the things that opened up the market. Of course, we could as well point accusing finger into some of the policies that they have actually gotten wrong. But I make bold to say that this is one of the policies that they actually called right. Because what they did was the harmonization of the window actually opened up the market. Because what he did was he actually repriced Naira accordingly and actually bring about the confidence that the foreign investor had in our market. And that's one of the reasons we've seen that influx of funds into our market between that time and now. So when you now want to step back and recalibrate to check what is happening in the market, I still make bold to say that there's still headroom in the market. I think it was still last week we spoke about the fact that come September, we expect FTSE index to monitor Nigerian market, which will further create open up a market. And just yesterday, S&P upgraded the Nigerian rating as well. What that will also do that it further opens the Nigerian market, because what it's doing is that it's actually reinforcing that confidence in investors. And gone are those days that investors are now scared whether Nigeria will be able to repay their debt, whether there will be time where we will actually lock our door again. Don't forget that the richest man in Africa has actually predicted that Naira will trade 1,000 Naira this year. And one thing that I've learned is that when a soothsayer is saying something, there's something you would have seen for him to actually mention something of sort. Because if you are actually printing every dollar, you will make bold to say that you don't think that there will be scarcity of dollar to supply or to meet obligation. And I guess it's on back of that he made that statement. And that was also echoed by Femi Otedola, which also aligned with what Alhaji Dangote actually said. So when you sum all these things together, it still tells us that the market still had headroom. It still tells us that there's still a lot of opportunity coming to the market. It still tells us that there'll still be more listing coming into the market this year. And when you look at it from that perspective, it's pretty clear that there's still a lot of opportunity in the markets.
Yeah. Dipo, what viewers might be wondering, obviously, it's said that once beaten, twice shy. If you've lost money, maybe during the 2008 financial crisis, maybe it might be, reasonable for you to be a bit wary, cautious, and, moving forward. Now, you analyze that you expect the equities market to continue to print these high returns. But then the question would be, is it that is the cash or the increase or influx of cash coming into the markets, or is this growth in prices supported by fundamentals?
Well, that's why I underlay some of those things with fundamentals.
Okay.
And that's why I mentioned the capacity, mentioned the stability of the currency. And beyond that as well, when you look at analyzing from the bottom-top approach, where you look at the sector in the company individually before you actually go into sector, you will see that there are a lot of sectors that are actually performing very well this year. The banking sector is on the oil and gas sector. They are currently on promo window. Oil price, they've enjoyed elevated oil price throughout the year, from the beginning of the year till today. And now we are seeing pullback from the consumer names as well. When you look at some of the results printed by some of these consumer names, and names like UACL, even Dangote Sugar, actually, after a long time, printed a positive profit after tax after a long time. And you look at names like international breweries, and you look at a couple of some of those names. After actually winning off the FX crisis, they've been able to actually stabilize, and currently they are now printing good return. And when you look at that from that perspective, it means that they have capacity to actually pay dividends. And also, in terms of earning, so it means that earning per share of some of these instruments will actually improve. And also, when you look at other ratios like EV to EBITDA of some of these names, it tells you that the valuation is actually still very much undervalued when you compare it to frontier market peers. And these are some of the metrics that you use in actually making decisions. And why I said that Nigerian market is heavily underpriced, because when you look at Nigerian markets, in comparison with other frontier markets, you will notice that we have been short out for a long time. At a point in time during
the FS
FTSE index,
crisis.
the FTSE index analysis, there was a time that we were separated to stand alone index, where
Oh
we
yes,
were
yeah.
removed from the emerging market and frontier market index to stand alone. And at the point in time, it
We're
means
kind
that
of
among your
isolated.
peers, exactly, you were isolated, and nobody wants to take a risk with that, because for them to
Yeah.
isolate you, there will be some risk element that led
Mm-hmm.
to that. And with the fact that we have been embraced back to the into the index, it tells us that there's a lot of opportunity in that regard. It tells us that there's a lot of value in that. It tells us that more foreign investors will now have a look on what is happening in Nigerian market, and knowing fully well that the market is still underpriced, because when they compare some of the valuation with some of the instruments they have in their portfolio, it will be crystal clear that there's still a lot of value in some of these Nigerian names than what they are currently holding. And that could also lead to actually underweighting some of those instruments, while they are actually overweighting Nigerian name in their portfolio. And when you look at it, it's somewhat to the fact that there's still a lot of headroom in Nigerian market. But is it broad-based? Is another thing we need to talk about. I don't think it's
Yeah.
broad-based. I think it's have
Okay.
to be selective. You mentioned something that happened in 2008. We understand that 2008 was more like a contagion effect of the subprime crisis that happened in the United States. And I've been at the first instance, we felt that Nigerian market was actually isolated and will
Yeah.
not be impacted. But to be truthful to ourselves, were we actually trading that time, or we were actually gambling? Because at that particular point in time, people are not looking at valuation. People were just people have that mindset that when you invest, it will surely go up. When you invest, it will surely go up. And just the first test of the market crumbled. But now we have a bigger asset managers in the country that can absorb some of these names, even in times where people are actually dumping aggressively below the market value. And when you look at the asset size of the PFAs currently, is not of 20 trillion. So it gives you an idea of what capacity they have, or they are bringing to the table. And just recently, the PenCon actually reviewed their percentage holding in the equity market upward, which will also give them room to actually hold more equities in their
Yeah.
portfolio. So when you look at some of these things, I think it actually is a pointer to the fact that there's still a lot of opportunity in the market. But my own advice is that ensure you know the name you are putting the money, and ensure that you understand the valuation.
Understand the business, know the name, know your numbers. That's really key. I mean, that's what I hear from you a lot, where I hear from, when we have this conversation about investing in any of these stocks. So I think that's going to be key. What we had the past time when we had that major crisis was, as you mentioned, a lot of people trying to gamble, which is usually will lead to losses. But let's discuss the broader Nigerian banking sector, because this week we received, or we saw, that massive 43 billion naira injected into First Bank by its chairman Femi Otedola, increasing significantly his stake in the bank. So, what does this signal to you? Does this signal confidence in First Bank post reorganization and recapitalization?
I think there's a balance that put your money where your mouth is. And I think that's exactly, whether it's put your money where your money is, or which other way. But I think that's exactly what is playing out now. It's a confirmation of the confidence that the Mr. Femi Otedola has in the business. For you to actually push that level of investment into that name, it tells you that you truly believe in the way of travel of the company. It simply means that you agree with the path at which the company is actually going currently. And like I actually mentioned earlier on, that First Bank has actually shared some of their weights. And And when you look at the provisions that was made in their full year financials, it's also to actually confirm to you that the bank has ensured that they actually share some of their weight to ensure that they can actually fly lighter. And it's on the back of this that we are seeing this level of interest in the market. And for me, we have known Mr. Femi Otedola in the past. We understand what has happened in FO. We know what happened in Gerigo. And here we are now in First Bank. So it simply means that if you, as someone that has been following his investment strategy, you understand the direction where First Bank will be traveling, considering the level of investment that this gentleman has actually pushed into the business. Would you say that First Bank is actually on a great stand? Well, I would say it's on a great stand. Are there still some T's and some I's to be dotted and some T's to be crossed? Of course, very well. Because when you look at their capital adequacy ratio, they still fall short of the requirements, and they promise that before the end of this of Q3, they would have regularized this. So what they are trying to do is to come to the market and raise money, and the money raising is just for the public. It's not going to be private placement. With this, immediately this is done, I make bold to say that First Bank will be on a great footing for anyone looking to actually invest in the bank. For me, I still have that view that it has potential for more upside movement. For me, I still believe that it's an opportunity for investors that actually missed the initial rally. I still feel that pricing and under one price to book is an idea that there's still a lot of value in First Bank. So if I have spare money in some of the banks where I can actually play some of my fund, considering the level where they are playing, and also considering that they have actually shed a lot of their weight, and also considering the person that's actually running business.
Okay, so I think that investment was done at 79 naira per share. So what potential upside do you see have for, or do you expect for First Bank?
I'm serious. I would not be surprised if by the end of the year, First Bank is trading at around 90 levels. Because when an
That would
investor
be
is
close
buying
to
at
that would be close to doubling the amount when you compare when the announcement of they taking those haircuts, came in. I think it was priced around 50.
no, he
Around
traded
50.
as low as 40 levels, around 42
Oh
levels.
yeah, so it's
Immediately
almost going
they
to double
announced the
that.
haircuts.
It's
Yeah,
almost going to be like 100% return if that happens.
exactly. Exactly. Yeah, because if you look at when they actually mentioned the haircut, what they mentioned was that they would likely print a return of about 50 billion. By the end of the year, they printed over 130 billion. So it gives you an idea of how you need to recalibrate that into your model and revalue the stock. And we saw their performance in Q1 as well. It was a stellar performance. And so when you build all this together into your model, it gives you an idea of where the business will likely trade by the end of the year. And also coupled with the fact that if an investor is buying at 79, of course, it means that there's something he's seeing that you are not seeing. And it's a matter of time for you to see what he's seeing that you are not seeing.
Interesting. Also, we saw that report, I think, was CardinalStone Partners, where their analysts are setting a new target price for Access Bank. I mean, we know that Access Bank has been in the news, and we've covered a lot of that here. So they're setting, I think, about 52 naira or thereabout for Access Holdings. What does this tell us about the confidence in the bank, even amid the BOFIA process that is ongoing?
You see, there's one thing we need to know very well. We need to separate what happened from the actual business operation.
Okay.
I will give you an example. I remember in 2024, when most of the companies were going through the FS crisis. I remember vividly that MTN posted negative shareholders fund. And I was speaking to someone, and I mentioned on it on the show that you look at the operational activity of the business. Companies that printed as high as close to about 500 billion in a year as profit after tax, but what the profit after tax was wiped away by FX loss. It means that it can actually replicate that same performance the following year. So it means that if there's no FX loss, it means that that company will print that humongous return. And for a long time, MTN was sold down to around the 180 levels. And for a long time, it was trading 180, 200 levels. And as we speak now, MTN is trading 800 naira. And how did the journey start? It started when there was clarity. What people were seeing that others were not seeing. When people started, the whole market started seeing the clarity. And the clarity is the fact that this bank, Access Bank, has been churning out great results. We saw their full year results over 700 billion. We saw their Q1 result over 200 billion. And we understand that it's not paying dividend. It's not as a lack of capacity. It was because they fall short of regulation, and they need to actually correct that aspect of their business. And that's one of the reasons why they couldn't pay. And market punished them for that. Does that reduce from the expected valuation of the company? No. You have to actually divert valuation, the intrinsic value of an asset from market value. An asset could actually be underpriced or overpriced. But when you look at Access as we speak now, Access is heavily underpriced in the market. And we keep ringing this bell. And I know that in the next 12 months, people will come back and watch this video and say, wow, we actually mentioned it that Access is actually heavily underpriced. So I actually agree with the writer, the researcher around what the valuation of Access Bank. You look at the performance of the company, look at the performance of Access UK. The profit before tax that the company brought to the table is close to about 290 billion. And these are some of the subsidiary that the central bank is pushing that they should divest from.
I mean, that's the concern too, isn't it? That's the concern.
You look at Ghana brought over 95 billion to the table, profits before tax. So some of these companies are actually doing very well. You understand me? And so divesting from some of these names, I think sometimes it will be very difficult, but it has to be a call. So I think this is a point where the management will have to sit down and now do their cost-benefit analysis around this. What is the cost? What is the benefit that this particular subsidiary is bringing to the table? And that will actually help them in actually making decisive decisions around that. And the company, they announced that they will be having their AGM meeting, I think second week in June. I'm sure these are some of the questions that people will ask. And I'm very sure by the end of the meeting, we'll have clearer view on the way of travel, on the solutions that the management is looking to bring to the table on actually correcting this wrong. Because the management knows very well that they need to pay dividends by the end of the year. And imagine Access Bank paying 5 naira by the end of this year, and the stock is still trading at 26 naira. Do you understand the level of profit dividend yield that is bringing to the table?
Yeah, the level of dividend yield.
You understand? So you understand the level of re-rating that this stock will enjoy within the shortest time. And that's one of the reasons why we felt that when you look at the intrinsic value, I think it is actually trading, the market is actually trading heavily below the actual value of the stock.
I mean, I think I agree with you because this is probably the highest valuation I've seen for the bank in a while. Even when this issue of the Bofia crisis, before it surfaced, before the non-payment of dividend or no, they didn't announce they were going to be making dividend payment before all those news came out. We're seeing about maybe 60 or 70% growth from where the price was around maybe 25 naira thereabout. But this call is actually significant. So they're looking at about 100% growth from where we stand now. Okay, we'll see how that plays out. So Deepo, let's look at the monumental gains that we are seeing from some stocks. So first, I have a couple of names that I wanted to share with you, and let's have what you think about it. So several Nigerian stocks have posted truly monumental gains in 2026. So names like SCOA Nigeria have posted 511% year to date. That's TIP, posted about 540% year to date. The NGX Group, which is the NGX, the company hosting the NGX, posted about 483% year to date. FTGIN Insure has also posted about 475% return to date. Then we have Zikis, Allied, RT Briscoe, DCAP. All these stocks have delivered triple and quadruple digit returns year to date. What's going on, Dickball? What's common factors are driving these outsized movers this year?
Well, when you look at some of these names, the first factor you look at how liquid are some of these names in the market. Some of them don't have huge depths. So it means that when you see a bit of activity in it, it will actually spur that aggressive movements. But you have a couple of newcomers into the market, like TIP. TIP, they are into waste management for oil and gas company. They came to the market with around, I think, around 9 naira. And currently is actually trading above that 36 or thereabout levels now. As we speak, you have names like Ziki. Ziki is into the agro sector.
Yes.
And the same name, he has been on aggressive outside movement. But in the last 2-3 day trading section, we've seen more like a retracement in that name. And sometime this week, there was a report that the CEO of the company sold about 5 million units of that stocks into the market. And the view is to actually provide liquidity. However, the result was otherwise because aftermath, we've seen aggressive offers of these instruments in the market as the instrument keep actually open on full offer. For TIP, we have still continued to see upside movement in TIP. And I think TIP rally is also based on what we are seeing in the oil and gas sector. So it simply means that they are also enjoying part of the good benefit that the oil and gas sectors are currently enjoying in such a time like this. And I guess one of the reasons, a lot of people feel that they have strong fundamental. A lot of people feel that they have strong capacity to generate revenue. And I think also I agree to a great extent. But however, my view is that you have to be very cautious so that you won't get to a level where the real value of the stock is now is more than where the instrument is actually is lower than where the instrument is currently trading in the market. And I guess that's one thing that we need to be very careful. Another thing also is that you need to be very sure that you are not just a bandwagon. You understand what is happening in the market. A lot of people just come to the market and like, oh, I heard that this has gained 40% yesterday. I want to put my money in it. Why do you want to put your money? Do you know the reason why he has gained 40%? These are some of the questions that we need to ask ourselves so that we will not fall victim of the same thing that happened to our father in the 2008, 2007, 2008 rally, when a lot of them actually fell into that huge trap. So for me, I think some of the names that you have mentioned, they are good names, you understand, but the issue is that they are not well liquid in the market. And when you don't have a lot of liquidity on some of these names, it means that it could actually fuel that level of return that we have seen. I remember I think it was about 2 years ago, that CWG printed over 1,000 return in the market. But what is the total float value of these stocks in the market? And so sometimes when the stock is not, the liquidity of the stocks is not is not deep, you may likely see this level of aggressive return as much as like the one we are currently seeing now. So for me, when you look at SCOA, you look at RTB School, most of them, they actually play in the automobile sector as well. And that's a sector that is actually growing as well. Is a sector that a lot of activity is actually happening around it now. You look at Nigeria now, we are seeing a lot of electric cars on the road. And these are some of the reasons why a lot of people are actually positioning ahead of time to see whether they can actually make a right call around some of these names. But in all, I also still think that investors need to be very careful on some of these names. Be sure that when you want to exit, you can actually exit.
That's key. That's important. Liquidity, check. Be sure that the stocks are, liquid. And liquidity in this context refers to the ease at which you can dispose those assets without suffering significant losses.
Yeah.
That's the key thing there. Some of those stocks, they they don't meet the amount of float or the available floats in the market. It's not that significant. So when one makes some decent purchase, it drives the stock really, really high. But we still have other stocks globally because some of our listeners are also asking us about US stocks and all that. And I thought let's talk about some of the US stocks as well that are printing these high returns. But before that, we've seen the S&P 500 relatively stable, even though it has peaked, reached all-time highs in the last trading session. So the S&P 500 trading around 7,400 to 7,450 level, with some modest daily moves currently trading at near the all-time highs. Yet we are still seeing explosive moves in AI and I think some photonomics memory space companies. So the first one that I want to talk to you about is Tech Creates Group. That's the trading ticker is TCGL. That stock is up 3,200% year to date. Another one is the Applied Optoelectronics with trading ticker AA0I. That stock is up by 484% year to date. Intel, I'm sure you know Intel. Intel is up by about 219% year to date. Seagate with trading sticker STX up about 186%, Western Digital 180%. Most of these stocks have exploded. They are mostly linked to AI and memory demand. Are there parallels that you see between the NGX small and mid cap frenzy with the US AI driven rally?
Well, I think where a lot of investors are actually putting their funds currently is more like in AI stock. And we understand why that is it, because that sounds more like the future as we speak currently. We've been seeing a lot of these companies actually pushing a lot of funds into their research and development department to actually ensure that they unravel more innovative opportunities in that regard. And that's one of the reasons why you keep seeing a lot of investors actually putting their funds in this. And you even look at most of the big players in the United States, the big names in the investment space. A lot of them are actually big. You look at all these big asset managers. You look at the BlackRocks of this world. You look at most of these big names. They are also very big in that regard. So if most of the big players are actually putting their fund in that sector, then where would you put your fund? And that's why that has been generating that level of attraction. Even the president of the United States, there was a report around his investments in the last month, maybe last 6 months or thereabouts. And he has shown tremendously that over 90% of his investment has been concentrated in the tech sector. And that is a very great one. But my concern is just that the fact that, just like what you said, could it be a bubble? And it's not
Yeah, I
impossible.
mean,
And
that's
when
so
I mean
that's the
it's not,
concern.
that's why I said it's not impossible. The reason why it will not be impossible is that if after some times all the investment in the research and development is not yielding anything. It gets to a level where there is no new innovation. You understand? If it gets to a level where we have been static in that regard for some time, it could actually lead to a bubble. But if we continue to actually innovate and actually get new or unravel new way of doing things, I'd make bet to say that we'll likely continue to see most of these companies actually continue to thrive. For me, I can also still take a bet or around AI stocks currently. And my view is still premised on the fact that there's still headroom. There's still more ground to cover. There's still a lot of things that we can actually use AI to actually solve. Of course, you say that, wow, we have actually covered tremendous ground in that regard. But I will still mention to you that there's still a lot of ground that's actually uncovered because there's still a lot we can actually use AI to do. And these are some of the things that some of these companies are actually working around, and some of these tech companies as well are actually working around. So when you compare what is happening in the United States market with what is happening in Nigeria market, the only correlation is the fact that both are outside movement, but the drivers of both markets is different. The driver of Nigerian market is that it has been underrated for a long time, and now
Okay.
people are now seeing value. The market is getting opened up. People are re-rating stock. There are policies that's opening up the market. We'll see what is happening in the banking sector. Banks are actually being have been forced to actually recapitalize, and all the banks in Nigeria they have actually recapitalized their balance sheet. And also, Nikon is also doing the same thing to the insurance space as well. And so it gives the Pencon is also doing the same to the pension companies as well. What you are trying to do is to improve the capacity of most of these companies. And when you improve capacity, it means that they have more fun to sweat. And you have more fun to sweat. It simply means that you can actually declare better return to your investors. And that's why I said that for Nigeria, it has its peculiarity because the market has been underrated for a long time. And now the policies are actually opening up the market and the confidence is actually coming back to the market. On the part of the United States, it's driven by technology, it's driven by what is happening currently, it's driven by innovation. And like I mentioned earlier on, innovation is something that you cannot sleep on. It's something that you have to be, it has to be continual. Because imagine you looking at a Mercedes-Benz 2000. Of course, when you bring that now, I'm not sure it's something that will be past fanciful to you. When you can
Yeah.
now see cars of this age that can drive itself, when you can see cars of this age that can sense around. You know, some of these things are innovation that is coming on board and that will make a previous recovery a cake. And that is exactly what we need to continue to do to ensure that the markets continue to open up. And beyond the tech as well, the financial sector is also, they're also catching in on some of these things because what is happening in the tech sector, some of them are the one funding it. You understand that you are
Mm-hmm.
able to actually push up fund into the market as well. And I think that these are some of the catalysts that is currently driving the market. And when you look at the result being posted by some of these big names in that sector as well, you understand that it's worth taking risk.
Yeah, I agree with you. But I think where our listeners will be watching or looking at is how do we identify these names before they begin to pop these massive returns? And I would say if I knew that, then probably I'll be, printing in billions of dollars as well. But what we'll try to do is to surface some of these names, surface for you how to identify these names, right? How to identify the stocks. And when you see these stocks, well, how you to do your analysis, understand the direction or focus of the company, what they're trying to achieve, and before you start to make your bets on them. And Deepo, I don't know, somehow within me, I'm thinking that 2026 is shaping up as a major turning point in wealth creation for ordinary Nigerians and even globally. So, could this be Nigeria's version of, the past world building cycles, like we saw the US tech boom, the Asian emerging market rallies that we saw? Are we seeing a classic speculative bubble? I know you've tried to, say no, we're not in some form of speculation. Are we seeing a classic speculative bubble in some of these low float names that could easily reverse? Is that what you're seeing?
Yeah, for the low floats name, I think it could be. I mentioned the fact that some of the level of return we are seeing is because most of these names are not very liquid.
Mm-hmm.
And that's exactly what we're currently enjoying. So it simply means that you just need one negative information
News
before
for
you
some
see
of those names.
everybody struggling to actually get to actually exit their position. So for in that name, I think that one needs to be very careful because it could be, but and that's one of the reasons why I said that it's not broad market based. It's
Okay.
based on specific names, and that's why I'm an ambassador of the fact that you need to understand the dynamics of the company you are putting your money in. You need to understand whether the risk is worth taking. And I say this a lot. Imagine me investing in Coca-Cola or maybe one fuzzy drink or one soda drink, and I need to take a soda. If I understand my investment is in this, of course, I know which one to buy because I know that my expenses will culminate into revenue on the part of
Yeah.
the company. So it gives you an idea of how to actually invest because if you know what the business is doing, it also helps you to see how to also patronize the business and also help to understand the product dynamics of the business. And for some of the names that we actually mentioned earlier on, some of them they are in good footing. Some of them they are not. You can't totally rely and feel that it's something you can hold for a long time. A lot of investors are holding it for speculative reason, and you get to a level where all of us will be just need to actually get to exit at the same time, and that's when the crisis will start. So for some of these low float names, I think it could be a bubble. For the fundamentally strong name, I think it's more like a rating the valuation.
So, do you have that sense that I mentioned? Do you have that feeling that 2026 is shaping up to be like a turning point in wealth creation? Because with the amount of massive gains that we are seeing in stocks, if someone is out there missing out, they are actually, on their own. I mean, that's the way I'll see it.
For me, well, I think I agree with you to a great extent. 2024, you miss it in 2024. Of course, you can complain. It was a mistake. You missed the rally again in 2025. And here you are missing the 2026 rally. So what would you say? It means that a lot of Nigerians have been leaving money on the table. And
Sure.
there are names in the market that is giving tremendous level of return. I mentioned about MTN in 2024, trading around 180, 200 levels. We've seen close to our 400% return on MTN between 2025 to today. And that is massive. That is massive. And we MTN is not it's not an ordinary name. It's a strong and fundamentally strong name. And
Mhm.
so when you see that level of return in such name, it gives you an idea of what I'm actually saying. So I think it's a change, and we'll be seeing a bit of interest from average Nigerians. A lot of people are getting more informed. We'll be seeing people also trying to trade by themselves. And now most brokering firms now have a trading app where you can actually log in, follow your portfolio performance, and also buy more or buy whatever name you want to buy, or exit some of those names that you feel that you need to actually exit from your portfolio. So putting your portfolio in your hand is a way to actually help you to also benefit from this. So I think I agree with you to a great extent.
Yes. Again, we are at a major inflection point. That's the way I see it. And if you're looking for where to get guidance, we provide that here every week on the Edge. So, again, like this video, subscribe to the channel, hit the notification bell. And if you have any questions, always post them in the comment section. We address all questions and we try as much as possible to provide the required guidance. Okay, Deepo, let's switch gears a bit and talk about inflation. So yesterday, the inflation figures came out. The April inflation just printed about 15, I think 15.69%, which came in slightly below estimates. I think the estimated range was about 15.7 to about 15.8%.
Mm.
Also, the US CPI came in hotter than expected. I think that printed around 3.8%. So the my concern, or what's coming to my mind now, is how should investors begin to interpret these inflation signals together? And what's your realistic, okay, outlook for inflation for the rest of, Nigeria's inflation figures for the rest of 2026?
Well, if you look at the inflation figure in Nigeria, and the expectation was that it will print between 15.7 to 15.8. And
Mhm.
what we saw was about 15.69, which also means that it printed below estimate. And that is marginally good because when you look at where we are. And for me, it's a big concern. And the problem is the fact that the current inflationary pressure is self-inflicted.
Mhm.
Is something that we actually placed on ourselves. It's not peculiar to us. We saw what happened in the United States. Inflation printed 3.8, and that's actually massive when you look at where they were actually coming from. And this is
Yeah.
also an economy that tried aggressively to rein in inflation for a long time while raising rates. And just within the shortest time, they actually took caution to the wind and back at this elevated level. And the crisis in the Straits of Hormuz has remained the fundamental issue, actually placing this issue on us, this weight on us. And for me, we've seen how that's actually translated into reduction in standard of living for Nigerians. Before this crisis started, I remember we were buying a liter of petrol at 750 naira. Currently now you buy at north of 1,300, meaning that close to 100% level of return
100%. Yeah. Yeah.
increase
Increase.
rather within that short time, and that is not as a result of our doing, and that's why I keep saying that we are not. Insulated again. We are now in a global economy, and we can be affected. There's this contagion effect of happening globally, and we already felt the effect, and that's one of the reasons why we are seeing prices going up. Price of gasoline has gone up. Our transportation costs have gone up. That has actually found its way into repricing the prices of food, and that is why we are here where we are now. But from here to the end of the year, what am I actually seeing? I think that it seems that we are seeing a bit of respite in that zone as we speak currently. We're
Okay.
seeing oil prices now trading below $100. And I think that both parties will likely sit on the table considering what is happening globally, and also
Yeah.
considering the fact that it seems that the card is now sitting in favor of Iran. And now that Iran is now having the bigger hand in this regard, I think both parties will need to actually sit on the table and actually agree on a win-win situation. And immediately that is sorted, we'll likely see oil price actually reverse back downward to maybe around $80. And why do I think that it will be that fast? Because you have countries like UAE that is ready to pump aggressively into the market. And when you have oversupply of commodity into the market regularly, that one way or the other, will actually push the price downward. And immediately that is done, we will likely see adjustments in price of gasoline at our gas stations. And at the end of the day, that should automatically reduce transportation costs and also find his way to actually reduce the prices of goods and services and improve the standard of living of Nigeria. And so I think that by the end of Q3, would have seen more like a change in the trajectory of inflationary travel. And now we've been seeing upside movement inflationary pressure. But I think that by then we'll likely see more like the inflation figure now inching downward. And at that particular point in time, we'll likely see a bit dovish monetary policy committee.
Okay. Do you see any of the CBN or the Fed? Do you see any of them, the monetary policy authorities, tinkering with rates in the short term?
No, I think the US Fed just last month actually passed on raising rates. The Nigerian Monetary Policy Committee will be sitting later this month. And I think I will bet on a pass as well. And the view is premised on the fact that it's premature to actually want to toe that aggressive line. What is happening currently is not a summation of different big crises around the world. That could actually be traced to just one crisis happening somewhere, and that you think that solutions are time. And why do you want to now toe the line of actually tightening up to further exacerbate the crisis on the people? And so I think that the monetary policy guys will actually wait it out. There will be forward guidance, and some of the forward guidance will be there to actually see what will happen between then and the month of July. Don't forget, it's just like about 8 weeks between when they will be sitting at the end of this month and the next time they will back on the table. So that is not too much for them to actually want to wait out and see what will be the impact of the change in situation at the Strait of Hormuz. So for me, I think I will actually vote for a pass on both sides.
All right. So the MPC meeting is coming up shortly. The new Fed chair just resumed, I think, on Thursday, and so we'll see what decisions they make going forward. Now, let's talk about the fixed income market. So earlier you mentioned that the S&P had just upgraded Nigeria's long-term debt rating from B minus to B, and with a long-term stable outlook. I think that's coming probably the first time since 2012, if I'm not mistaken, that Nigeria is getting that strong rating from S&P. What does this tell you? What does this signal to you in the first instance before we begin to talk about the fixed income market?
Well, what this means to me is that it means that if I've been doubting the direction of travel of this current administration, if I've been doubting that it's wrong, then I think this will actually confirm to me that they're actually traveling on the right trajectory. The last time we had this level of rating was 2012, and that was before the crisis started. And between then and now, we've been having more like a lower level. At a point, is that we are close to junk rating. Yeah. But now it tells you that there's been a lot of shifts. And sincerely speaking, the government mentioned that it will be very tough. The government mentioned that it will be very painful. But however, that is only way of travel that is sustainable for us. And that we've been seeing the CBN governor that has been more of like database, and he's actually been following orthodox method in terms of ensuring that there's no gambling, there's no way around it. When something is happening this way, this is what we need to do, and they've been actually be following it to the letter. And I think that these are some of the reward for some of those hard decisions. And for the country, it means that we can now to reprice some of our obligation at a lower rate. And it means that if Nigeria is going back to the Eurobond market now, we actually will actually get to borrow at a lower rate than where we actually borrowed last year. And also, this we expect to also affect our local borrowing as well. So it simply means that it's just a matter of time that you're having yield at this elevated level. So by now, because you may not be available when you are ready, because the promo could be over anytime soon. Like I mentioned, there are key things that is driving the market as we speak currently. The Strait of Hormuz is the key thing, and because that's actually pushing inflationary pressure. Now that we have seen better rating, now imagine that the crisis at the Strait of Hormuz was actually resolved. So it simply means that we will likely start seeing investors trying to test our market to take advantage of these elevated rates. And what it will mean is that it will mean downward movement to fixed income instruments.
Okay, I'm not sure if I totally agree with you that the rating is based on some of the or the reforms put in place by this current administration, because I think in that report the S&P cited increased crude oil, increased refining capacity, and
Yeah.
so I'm not sure that is totally due to
So
these administrations
so
making.
so the refining capacity in question, it was part of what was mentioned
Yeah.
among many other things.
Yes. Yeah.
Among many other things. They also
Yeah.
mention high oil price. And don't
Mhm.
forget that high oil price is not sustainable. We just mentioned that now. So
Yeah.
beyond that, it gives you that, I'm sure that will go a long way in clearing the fact that beyond the fact that we have better refining capacity, it also means that we have other
There
policy
are other
that's opening up.
structural
Yeah.
improvements that have
Now,
been
where
made. Yeah.
the current government just signed a pact with uh, a Chinese company around the Port Harcourt and the Warri refinery. Imagine that also now turn out good and we get good results. And in a matter of time, it means that we have better refinery capacity. And if that is the case, it means that then we'll be on a strong footing then.
I'm not sure whether I mean, agreement or it sits with me, sits right with me, that we continue to discuss about revamping some of these refineries that will spend billions of dollars and are not working. We've just seen a classic example of where determination, how someone as determined as Aliko Dangote was able to bring out
Yeah.
a refinery in less than maybe about 7 years or thereabout. But we had
Yeah.
this refinery that's been gulping taxpayers' money of over
So,
maybe that same over $20 billion in the last 20 years. And we're still signing agreements. I mean, I've not read the
so,
contents of this
So,
agreement, but
the agreement is an agreement where Nigerian government is not parting with a kobo on the transaction. So it's going to be fully funded by the party. The only thing is that they will cede percentage of holding to the party. So it's not going to be funded by Nigerian government. Nigerian government is not parting with a kobo on the transaction. And that's one of the reasons why I felt that it's actually a good deal. Rather than having that facility idle, just sitting idle there. Of course, there's nothing wrong if you can actually get someone to actually work and actually make it work. Of course, it will not be a bad idea. The more the merrier, and that's my view. The more the merrier, the more we have people on the table playing in that segment of the market, and the better we can actually enjoy as a country. I will see what happens in cement space. Dangote playing in that space. We have Buhari as also a strong competition. And also, we also have Lafayette, which is now hosting, actually playing aggressively in that sector. If you can have the same thing in that oil and gas sector in terms of the refining sector, of course, it would not be a bad idea.
yeah, let's see how that begins to shape up in the coming weeks and months. So get back to the FGM bond auction that is going to be taking place. So the DMO is looking to raise about 600 billion naira through two reopened bonds, the 2035, 20 the 2020 January 2035 bonds and the April 2037 instrument. So inflation now at 15.69. How attractive do you expect demand for those longer dated instruments, and where do you see the raise printing at the auction?
Thank you very much. I think I will actually pick rates printing around 1670 levels. And my
Yeah,
view is premised
1670
on,
was the rate you suggested last month. That's even
yeah,
before inflation got to 15.69.
yeah. If you look at where the instrument printed last auction, it printed 1659. And now I'm actually stating 1670. And
Okay.
my view is premised on the level of liquidity that is sitting in the market. And don't
Okay.
also forget that the DMO is not in any desperation to borrow. We saw what happened at the last auction. They
Yeah.
offered 700 billion, but they only took 200 and something billion. So it means that they are not demonstrating any aggression to actually mop up borrowing at elevated level. And that's one of the reasons why I said that it will actually print around 1670. And Nigeria just got re-rated. And maybe that will actually be part of the book on Monday when the auction actually starts. Because it will also actually, because don't forget that portfolio managers have ratings that they also can actually invest in. But now
Yeah.
that Nigeria now have a better rating, of course, we could fall within the radar of instruments that they can actually put their funds. And if that is so, it simply means that we'll likely see more participation in the market at the forthcoming auction. And what that will mean is that you have more demand,
Demand.
and the DMO will actually now take the instrument. So I think that market will close as high as 17%. But I think the DMO will want to clear the market around 60, 70 levels.
Okay, so we'll be providing updates as that option takes place on Monday. So please watch this space. We'll let you know what the stop rates look like in our next episode. Deepo, let's talk about commodities, gold, and ETF because listeners have been asking whether there are opportunities in those asset classes as well. So, on the commodities fronts, oil prices have remained relatively firm amid even the global geopolitics that we talked about. Nigeria's oil production has improved. At the same time, we are seeing strong rallies in other commodities like cocoa, tin, lithium. How do you see these commodity trends impacting Nigeria's economy? Does it have any impact on our foreign reserves and the listed oil and gas stocks on the NGX in the coming months?
Well, I think when you look at what is happening in the commodity market, in such a time like this, when there's a lot of volatility, when the market is edgy, of course, what you tend to see is that people fly to safe haven. And where do they fly to? They fly to into dollar denominated asset. They fly into commodity. They fly to gold, and that's exactly what we are currently seeing now. A lot of people are just flying to safe haven, considering the volatility that we are seeing currently in the market. So for me, I think that there's still a lot of opportunity in that segment of the market. You mentioned lithium. Lithium is more like the future as we speak currently.
Mm-hmm.
Nigeria is heavy. Nigeria has this on heart resources, rare earth resources
Yeah.
in huge volume. And at a program in Rwanda, I think the president actually mentioned, or somewhere, I think Rwanda or Kenya, the president mentioned something around the fact that the focus, whenever you are taken out of the country, there must be added value already before you
Mm-hmm.
can actually take it out of the country. So it tells you where the global economy is going to and the opportunity, that tremendous level of opportunity that you still have on some of these commodities. And you have a lot of electric car actually out there in the markets. Nigerian market is getting more dominated by these electric cars, and you need to power some of these cars with battery, lithium battery, and these we have in abundance. And don't forget that we have not even scratched anything when it comes to some of these things. And so it simply means that as people begin to see the benefit that's in this commodity, you continue to see better valuation of some of these commodity. You have inverter battery now in lithiums. You have car batteries now in lithium. And so it gives you an idea of the level of demand that we'll continue to see on some of these rare earth commodity. And it simply means that we'll continue to see upside movement in some of these things. And that's why when you invest in commodity, huge edge. And for me, any portfolio that you are sitting on that does not have some of this commodity as a form of diversification, one way or the other, could actually be exposed to some level of risk. And that's why it is very, very essential for some to actually ensure you have some of this commodity sitting in your portfolio.
Yeah, so I think I agree with you. It's actually a smart way of diversifying. Gold prices have hit record highs globally this year, and that's a way, also a way in which you can hedge against inflation and currency volatility that we currently have. Another asset class that people have been talking about is ETFs. So ETFs are becoming increasingly popular even among Nigerian retail investors now, looking for diversification amidst the high stock volatility that we've talked about. I mean, we just discussed about some stocks printing about 500% to 3,000%. Are there investable ETFs that, I mean, you can shed light on the NGX to our community here that might be interested? I mean, whether they be equity index ETFs, banking ETFs, gold linked ETFs, or just commodity based ETFs that you know watchers might need to follow.
Well, we have a couple of these ETFs on the exchange. We have the Stanbic ETF 30. We have the Veritas banking ETFs. We have the Veritas, Betivas industrial ETFs. We have Betiva consumer good ETFs. And we have the Lotus ALA equities. And that one is for people that actually investing in, if you are an ethical investor, that you are investing in a name that's only aligned with your faith, and of course you have room to actually invest in these names. And we have the new gold ETFs, Tony. These new gold ETFs, and it comes to mind regularly because I remember during that capital control time. And what most of these foreign investors would do is that they will buy new gold in Nigeria and go and sell on the Johannesburg Stock Exchange because it has dual listing as a way to actually take out their fund in those days. And it's a new dawn. Things have changed, and you don't need to actually buy new gold just because you want to take advantage of that to actually exit actually
except you're trying to
your fund. So you
get
cannot
the capital
invest
appreciation.
in it. Exactly. You cannot invest in new gold as a form of ETF. What that will help you do is that it gives you like a presence in actually investing in gold. And when we were talking about commodity earlier on, we mentioned gold as one of the commodity in the market. And sincerely speaking, gold is not new to Nigerians, and I'm sure you know that very well.
Sure.
Even our mothers, we can remember vividly, they invest aggressively in gold, and you see them have that for usage and also for investment. And most of them still have it seated in their wardrobes, one way or the other. And so it's not a new thing to Nigerians. You go into Balogun market, you see a lot of those yellow jars, you see all those traders in the market. And wearing some of these gold, maybe as earring or as necklace or maybe as bangles or some. And that is a form of investment. It's serving dual usage. It's serving as usage, and it's also serving as investment. So imagine someone that bought gold maybe in about 5 years ago, and even if it's just a necklace, by the time you are selling now, it's going to be at today's valuation. And that's exactly, so it's not new to Nigerian market. But for those new investors, this is a form of getting that asset, having that asset in your portfolio without the need to have a physical gold at hand. You can actually buy new gold ETFs. It will give you that level of return. So it moves in direction. It's heavily correlated with the movement in gold. So it simply means that as gold continues to go upside, the valuation of this name also move in that direction, and that will also give you the same benefit that you'd have enjoyed if you are actually investing in gold. So ETFs is a very good way to also diversify your portfolio. It helps you to actually touch that area of market that you cannot touch by yourself. When we talk about Stanbic IBTC ETF 30. ETF 30, it's about 30 most liquid stock in the market. So it simply means that by yourself, you may not be able to buy some of these stocks into your portfolio. But going through some of these ETFs, you can have presence. You can have the presence of some of these names in your portfolio. So these are some of the ETFs in the market, and they are very liquid for anyone looking to actually invest.
Yeah, that's insightful, people. And for our listeners, please continue to send in your questions. We just discussed your questions about commodities and ETFs. So, Deepo, let's begin to draw this discussion to a close. And I like you to pick one Nigerian stock or a U.S. or global stock from any of the sectors that you think our viewers should watch in the next 30 to 60 days, and why you are making this bet.
For me, I will pick Access Bank.
I'll pick Access Bank?
Yeah, I'll pick Access Bank. Now, why I'm actually picking Access Bank is because I know that is a stock that can actually trade as high as 50% return in the next 90 days. Access Bank was trading at 36 before we saw that aggressive drop.
But sorry to cut in. That would be based on you anticipating that these issues will be addressed within that period. Is that why you are making that bet?
Market does not wait for Hactra. Market trade sentinel. Okay. I mentioned to you that there will be AGM meeting by June 10th. So the outcome of the AGM meeting will go a long way in clarify and giving people the stand or the step that Access Bank is looking to actually take. And that step will go a long way in actually open up the opportunity that the instrument will bring to the market. There's a lot of names that come to the mind, but the one that came to mind, I thought that will actually present that better level of return for me, and that is Access Bank, and that's why I mentioned Access Bank.
Okay, thank you so much for your brilliant analysis as always. It's been a pleasure speaking with you again, Deepo.
Thank you very much, Dr. Kafa, for having me today, Gabe.
All right, thank you everyone for joining us for this edition. Please like this video on your way out, subscribe to the channel, hit the notification bell, and share with your communities. Don't also forget to send in any questions that you may have. The comment section is open. Please send in any questions that you may have, and we'll be happy to discuss them and help to analyze any of those questions as they come. And it's been a pleasure hosting you again today, and thank you. Bye.